Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She is a personal financial advisor. You can contact her with the email hồng.nguyen@bcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trinh Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about MWG. MWG owns the leading mobile phone and consumer electronics chains in Vietnam with 2020 market shares of 48% and 44% respectively. To sustain strong long-term growth, MWG is rolling out the Bách Hóa Xanh Mini Mart chain. As you can see, this is the report which was collected by Viet Capital Securities about MWG on the 2nd December 2022, with the current price is 45,100 Vietnam dong. Target price 82,000 Vietnam dong. Previous target price 94,000 Vietnam dong. Earnings to recover in 2023 on smaller lots at Bách Hóa Xanh. We cut our target price for MWG by 13% but maintain our buy rating as the company's share price has dropped 31% over the last 2 months. Our lower target price is due to a 30% cut in our aggregate 2023 forwards, 2025 forwards net profits after tax MI was a result of our weaker demand outlook for smartphones and laptops and consumer electronics. 2. Lower assumption for average sales per store and thus lower profitability improvements for Bách Hóa Xanh, and raising our MWACC due to our higher equity risk premium, which are partly offset by rolling our target price horizon forward to end 2023. We forecast the sales growth for MWG's key retail businesses Thế giới di động, điện máy xanh and Bách Hóa Xanh to weaken in 2023 due to overall weaker consumer confidence amidst an economic slowdown as we expect most consumers to trade down and tighten spending. Nevertheless, we forecast a smaller net lots at Bách Hóa Xanh of 1.1 trillion Vietnam dong, 45 million US dollar in 2023 compares to 3.4 trillion Vietnam dong, 138 million US dollar in 2022, and now expects the chain to break even in terms of net profits in 2025. This is the major driver for our 30% EPS CAGR forecast in 2022 to 2025 forwards. Based on our forecast, MWG's current 2023 forwards, 2024 forwards, PERs are 13 times, 9.3 times respectively. Potential downside catalyst. Corporate action at Bách Hóa Xanh that could unlock its equity value. Downside risk to our positive view, weaker than expected consumption of mobile and electronic products, slower than expected improvements in sales per store and profitability at Bách Hóa Xanh. We forecast Vietnamstock and Vietnamstock's combined revenue growth at mid to high single digit rates in 2023, 2024 forward, 2025 forward, compared to expected mid-teen growth in 2022 forward. We cut our aggregate 2023 forward, 2025 forwards combined revenue for Thế giới di động and Vietnamstock by 12% year, mainly due to one, lowering Vietnamstock's aggregate sales, and two, decreasing top zones aggregate sales during the period owing to the current global shortage of iPhones and our lower store expansion projection. Additionally, we expect MWG to conduct heavy promotional activities to stimulate demand in 2023, further squeezing profitability at Thế giới di động and Vietnamstock. We expect Thế giới di động and Vietnamstock's combined net profits after tax amount growth at less than 19%, 20% year-over-year in 2023 forward, 2024 forward. We cut our aggregate 2023 forward, 2025 forwards revenue for Bách Hóa Xanh by 29% due to a weaker than expected sales per store trend and management's cautions store expansion plan. We forecast Bách Hóa Xanh's monthly average sales per store to rise 20%, 6% year-over-year to 1.36 billion Vietnam dong, 1.43 billion, and 1.52 billion Vietnam dong in 2023 forward, 2024 forward, and 2025 forward, which are lower than our previous expectations by 10%, 5%, and 1% respectively. We also cut our projection for Bách Hóa Xanh's net profits after tax in 2023 forward to 2027 forward by 62% due to a higher projected SG&A per sales. We also delay the time for Bách Hóa Xanh's reaching positive net profits to 2025 from previously 2024. Given Bách Hóa Xanh's priority to achieve net profit stability, we scaled down our projected new stores for 2023 forward, 2024 forward, 2025 forwards to 0, 100, 300 from 300, 500, 600. That said, with average sales per store of 1.36 billion Vietnam dong, GPM of 24.5%, and an absence of 500 billion Vietnam dong, $20 million of one-off restructuring expenses. We estimate Bách Hóa Xanh's net loss in 2023 to drop 67% year-over-year to 1.1 trillion Vietnam dong, $45 million in 2023, offsetting our expected 19% year-over-year drop in Thế giới di động and Vietnamstock's combined net profits after tax amount in 2023 forward, and helping MWG's net profits after tax amount to rise 20% year-over-year in 2023 forward. And now we move to the 10 months 2022 results. Weaker than expected sales in mobile and consumer electronics. Bách Hóa Xanh sales per stores stagnated month-over-month. Figure 1, MWG's 10 months 2022 results. MWG announced preliminary to 10 months 2022 results with net revenue of 113.7 trillion Vietnam dong, 5 billion US dollar, more than 15% year-over-year, and net profits after tax of 3.8 trillion Vietnam dong, 155 million US dollar, less than 2% year-over-year, both of which complete 77% of our previous respective full-year forecasts and track behind our previous expectations. 10 months 2022 results imply revenue of 10.9 trillion Vietnam dong, 445 million US dollar, less than 10% year-over-year, and net profits after tax of 356 billion Vietnam dong, 15 million US dollar, less than 37% year-over-year in October 2022, in which Vietnamstock and Vietnamstock's aggregate revenue declined 16% year-over-year to 8.6 trillion Vietnam dong, 351 million US dollar. We note that Vietnamstock and Vietnamstock performed strongly immediately after the relaxation of social distancing measures in October 2021, while Vietnamstock sales remained below our expectation in October 2022. Despite the Lunar New Year approaching in early 2023, Vietnamstock's revenue in the month was encouraging, mainly due to iPhone sales. Nevertheless, management expects the revenue contribution from iPhones in Q4 2022 to be weaker than what was previously expected due to a global supply shortage resulting from COVID control restrictions applied at Foxconn in China, which produce around 70% of iPhone shipments globally. Bách Hóa Xaang's revenue was 22.3 trillion Vietnam dong, 899 million US dollar, less than 9% year-over-year in 10 months 2022, and 2.3 trillion Vietnam dong, 94 million US dollar, more than 22% year-over-year in October 2022. Bách Hóa Xaang's monthly average revenue per store was 1.37 billion Vietnam dong in October 2022. A slower improvement was 1.3 billion Vietnam dong, 1.36 billion Vietnam dong in July and September 2022. However, Bách Hóa Xaang's GPM was maintained at 25% after a heavy rainy seasons in Q3 2022. Management started to see decelerating sales growth at Bách Hóa Xaang stores in provinces outside of Ho Chi Minh City, which account for 70% of Bách Hóa Xaang's total store count. Management believes weak consumption, which was stemmed from one, inflationary pressure starting in early 2022, coupled with two, the recent deterioration in business conditions among exporters, leading to workers suffering reduced working hours or even unemployment, is negatively impacting Bách Hóa Xaang's sales per store momentum in areas outside Ho Chi Minh City. Ancon pharmacy chain had no new store openings in October 2022 and finished 10 months 2022 with a store count of 529 compares to management's initial target of 800 by year-end 2022. Profitability trailed our expectations and maintained in a downtrend as MWG recorded net margin of 3.4% in 10 months 2022 compares to 3.9% in 10 months 2021. Net margin in October 2022 improved to 3.3% from 2.8% in Q3 2022. That said, MWG's net margin remains broadly flat compared to the previous from March to May 2022, while we expected Backward improvements in average sales per store and the absence of one-off restructuring expense to export margins. We partly attribute the lower than expected net margin in October 2022 to the dampened combined profitability of Thế giới di động and Điện Máy Xanh as a result of softer demand at Điện Máy Xanh. On the other hand, Bách Hóa Xanh achieved EBITDA break-even at the company level in October 2022 per management. Moving forward, MWG will prioritize maximizing cash flows over maintaining profitability, which implies that the company will likely apply discounts and promotions to clear inventory if necessary. And now let's go on to the next part, that is 2022 forward. Thế giới di động and Điện Máy Xanh expansion driving revenue growth, net margin remains under pressure. Figure 2, BCSC's 2022 forecast. Thế giới di động including top zone. BCSC comments on 2022 forward, mainly due to our cut in Thế giới di động SSSG to a low single-digit rate from a mid-digit rate previously, and our cut in its online sales by 60% due to our expectation of weaker than normal demand in Q4 2022. We forecast revenue of TGDD stock zone to rise 12% year-over-year from 18% year-over-year previously, which will mainly be driven by strong online sales and a full contribution from stores opened in 2021. We cut our forecast for top zone by 29% to 2 trillion Vietnam dong, $85 million as we now expect a lower supply of iPhone 14 Pro and Pro Max models due to the global supply shortage will dampen top zone sales prospect in Q4 2022. Meanwhile, we edged down our store count forecast for top zone to 93 stores by year-end 2022 compared to our previous forecast of 100 stores. Điện Máy Xanh including Bluetronics, mainly due to our cuts in Điện Máy Xanh DMX and DMS SSSG to a flat low single-digit rate from a mid-single-digit rate previously, and our cuts in DMX online sales by 25% due to our expectation for weaker than normal demand in Q4 2022. We project MWG will add 234 DMS stores compared to our previous forecast of 300 bringing DMS total store count to 1,034 and contributing 11.2 trillion Vietnam dong, 455 million US dollar of revenue by year end 2022. BHS HS Bách Hóa Xanh. We cut BHS SSSG to a negative rate from our previous forecast of a low single-digit rate as SSG in 9 months 2022, a negative mid-high teen rate tracked behind our previous expectation. As a result, we reduced our 2022 forward aggregate sales per store assumption by 2% compared to our previous forecast. Ancang Pharmacy, due to our lower projected number of new Ancang stores, we project Ancang will add 351 stores compared to our previous forecast of 622, bringing its store count to 529 by year end 2022. We note that MWG started to consolidate Ancang in late 2021. Online sales. Our forecasts include one, a 27% increase in Thế giới di động and Vietnamstockmarket online sales to 21.4 trillion Vietnam dong, 933 million US dollar, and two, flat growth in Bách Hóa Xanh online sales of 975 million Vietnam dong, 39 million US dollar, 3.6 trillion, 3.6% of BHX total sales. Net profits after tax amount, we forecast Bách Hóa Xanh's lots in triple year-over-year to 3.4 trillion Vietnam dong, 138 million US dollar, compares to our previous forecast for a 2.8 trillion Vietnam dong losses. BHX loss in 9 months 2022 surpassed our previous expectation. We maintain our projected GPM of 24% in 2022. EPS diluted by ESOP issuances. Effective tax rates due to the increase in Bách Hóa Xanh's net lots, in turn increasing MWG's taxable profits. And next part, that is the 2023 forwards, muted sales growth, lower net lots at Bách Hóa Xanh to drive earnings growth. Thế giới di động including top zone, we forecast Thế giới di động X top zone revenue will rise 4% year-over-year, which is backed by low single digits SSSG. Top zone to contribute revenue of 3.5 trillion Vietnam dong, 143 million US dollar, resulting from a full contribution of 93 new stores opened in 2022. Meanwhile, we expect top zones SSSG to drop 10%. We expect the current global supply shortage of iPhones stemming from China's commitment to its zero COVID policy will significantly increase the order lead times for iPhones, hence reducing iPhone sales volume in Vietnam. We project top zone will add 27 stores in Q4 2022, bringing its store count to 113 by year-end 2023. Vietnamstock, including Blue Tronics, backed by low single digits SSSG and a full year contribution from stores opened in 2022. We project MWG will neither add any super mini Vietnamstock stores nor Vietnamstock center stores 2,500 to 3,000 square meter per store in 2023. Bách Hóa Xanh, driven by a full year contribution from 1,729 stores year-end 2022, with improved average monthly sales per store of 1.36 billion Vietnam dong. An Khang Pharmacy, driven by a full year contribution from 351 stores opened in 2022. We expect An Khang's blended average monthly sales per store at 450 million Vietnam dong in 2023 compared to 400 million Vietnam dong. Net profit after tax MI, we forecast Bách Hóa Xanh loss will narrow by 67% to 1.1 trillion Vietnam dong, $45 million, primarily owing to expected material improvements in sales per store. The action of 500 billion Vietnam dong of one-off restructuring costs and a projected 30 basis point increase in GPM to 24.3% due to our expectation for decreased self-invested promotional activities for Bách Hóa Xanh in 2023. We expected Bách Hóa Xanh will work with brands for more favorable trade terms moving forward. Net profits after tax from the remaining businesses, mostly mobile and consumer electronics, to drop 19% to 6.2 trillion Vietnam dong, $250 million due to a projected 110 basis point drop in GPM and 110 basis point increase in SG&A per sale of thế giới di động and điện máy xanh. EPS diluted by ESOP issuances. GPM mainly due to a projected 110 basis point drop in GPM of thế giới di động and điện máy xanh, as we expect for more promotional activities in order to stimulate demand, which is in accordance with MWG's plan to prioritize maximizing cash flow over maintaining profitability. Effective tax rate, owing to a projected smaller loss from Bách Hóa Xanh, which is not tax deductible and will be carried forward. And now I will share with you some information about valuation. We value MWG using a sum of the parts method. Including one, a 5-year DCF based on free cash flow to equity for the mobile and consumer electronics businesses, and two, 10-year DCF for the grocery business. We do not employ a peer-based evaluation for MWG due to a limited comparable universe. In addition, in order to factor in the dilution impact of annual ESOP issuances from the perspective of an external existing shareholder, we assign our our projected FCFE with weightings that reflect the cumulative dilution of projected future ESOP issuances. In this update report, we raised our WACC assumption due to our higher ERP and roll out target price horizon forwards to end 2023. Figure 4 summary of BCSC valuation for MWG with target price is 82,000 Vietnam dong per share. Discounted cash flows peso, zero and Vietnam sang Figure 5. Figure 5 DCF valuation. Figure 6 cash flows. Recommendation history. Actual price. And the red is the target price. Financial statements. And that brings me to the end of my presentation about MWG. Hope this video will be useful for you. And if you want to open a legal trading account, please contact us with the information on the screen so that we can assist you. Thank you for listening and see you next time.